So let's go into the fourth concern of the Auditor General. Now, this one was non-recognition of income tax and VAT receivables. See, so the more you dive into the Auditor General's report, the more you question some of the things that are done in the financial statement of Ghana. Because and you're going to be learning this if you have not already in public sector. One of the fundamental IPSAs that we're going to be looking at will be IPSAS 23, which is revenue from non-exchange transactions. And it simply means that since we are preparing financial statements on accrual basis, the total revenue must include all revenue receivable by the government. And then the receivable figure on the face of the statement of financial position must include that figure. So for instance, if government has assessed any amount of tax, but has not received the money yet at the reporting date, that amount that has been assessed, since the tax has already been assessed, it means the entities, the individuals, owe the government. And so that should be included as part of the tax revenue of the government, and then included also in receivables. Then if the government is going to be making any provision for irrecoverable debt, because some of the tax that have been assessed, not all could be collected, then they could make the provision for bad debt. It will be subtracted from the receivable and recognized in the statement of financial performance. That is what IPSAS 23 is about. But what is happening in the 2024 year end is that there was no recognition of income tax and VAT receivables. What does that mean? It means that the Controller Accountant General did not recognize receivables in the whole of government accounts in respect of assessed but uncollected income tax and VAT at 31st December 2024. This practice persistent despite the financial statement being explicitly stated as prepared in accordance with IPSAS accrual basis. If you are preparing a financial statement on cash basis, then assessed but uncollected income tax and VAT should not be included in the financial statement. But if you say that you are preparing a financial statement using the IPSAS accrual basis, then you are supposed to include that in the financial statement. Now, the big question is, why is this important? Because you see, the impact of this non-compliance is significant. It leads to understatement of tax revenue and non-recognition of tax receivables, resulting in the misstatement of assets in the financial position. Furthermore, the continued use of cash basis for tax revenue recognition directly constitutes non-compliance with IPSAS. Because it's like Controller Accountant General is using cash basis for the tax. Okay, the one we've collected, that is what we will use to account for it. But that is not what the IPSAS says. Now, listen to what the Controller Accountant General said. The Controller Accountant General acknowledged the audit's recommendation for compliance and committed to working with the Commissioner General of the Ghana Revenue Authority and the Ministry of Finance on the necessary improvement measures to recognize income tax and VAT receivable on full accrual basis in line with IPSAS 23. This is a fundamental breach of accrual basis of accounting, which Ghana claims to have adopted. You don't need any Commissioner General, any Finance Minister. Have you assessed the tax? Yes, we have. How much is it? Include it in the revenue. Do you want to make provisions for or irrecoverable? Yeah, make provision. So maybe we've assessed that tax outstanding is like 80 billion Ghana cedi. Okay. Double entry for that is to debit your receivables, right? And credit the tax revenue with the 80 billion. Now, Controller Accountant General can say, out of this 80 billion, we are likely not to get 30% of that. So we will make provision of 30% of it and only recognize 70% on the face of the statement of financial position. Do it. That is IPSAS 23. So do the right thing. And so this impacts the credibility of reported revenue figures and the ability to link tax policy to actual financial outcomes. So this is one of the reasons for the qualified opinion. Non-recognition of income tax and VAT receivable. A breach of the fundamental principles used in the preparation of financial statement accrual basis. Again, for the purpose of our public sector examination, when we are preparing financial statement, we are going to be doing the right thing in accordance with the IPSAS. As to why Controller Accountant General is not doing it, that is not supposed to be the case, because he is supposed to know better, or she is supposed to know better at the end of the day. But that is what we must understand in respect of that point there.